How Europe can avoid a trade war in a second Trump term. The U.S. stock market has cheered the pro-business agenda that Donald Trump has promised in a second term, but policymakers in Europe are bracing for potentially tough 4 years ahead as the president-elect looks poised to potentially set off a new trade war. Trump has championed tariffs as a key protectionist policy to boost his America First agenda, proposing sweeping tariffs of 10%, 20% on all countries and 60% on goods from China. Europe appears particularly at risk from the impact of tariffs amid an already fragile economy, experts said. Germany's central bank president Joachim Nagel says the tariffs could cost the country 1% of its GDP, causing it to possibly slip into negative growth next year, while both French President Emmanuel Macron and former Italian Prime Minister Mario Draghi have warned the U.S. and Europe are barreling toward a trade war. Goldman Sachs said recently that tariffs could cost the whole euro area a 0.5% hit to real GDP, with the bulk of the downturn likely to be felt next year. Economists and analysts said that in order to avoid a trade war, policymakers in Europe need to employ a specific playbook to mitigate the economic drag while keeping trade tensions in check. According to Andrew Kenningham, chief European economist at Capital Economics, the European Union will likely need to retaliate, though not in exactly the same way as the U.S. Kenningham says the EU will likely hit the U.S. with targeted tariffs on certain industries, rather than an across-the-board action. It would probably impose targeted tariffs on products of symbolic or political importance, rather than an across-the-board tariff, and probably on a fairly modest scale, he wrote in a recent note. It wouldn't be the first time the EU has employed such measures. Kenningham points to the EU's use of item-specific duties on U.S. imports, like Harley-Davidson's and bourbon whiskey, after Trump employed tariffs on steel and aluminum from the EU during his first term in 2018. Those retaliatory tariffs were worth less than half those imposed by the U.S. at the time, but worked to soften the blow without instigating further tensions between the U.S. and Europe, he said. This time around, any retaliation will have to strike a similarly smaller blow than the actions from the U.S., Kenningham said. They want to de-escalate, rather than escalate any trade conflict, he told Business Insider. Kenningham said EU policymakers could also negotiate a deal to avoid U.S. tariffs. The European Commission could pledge to purchase certain commodities from the U.S. in greater quantities in exchange for an exemption from tariffs, similar to how the Commission negotiated over purchases of liquefied natural gas and soybeans in Trump's first term. Kenningham says the Commission doesn't have total control over actually implementing these trade deals, though, so it's unlikely Trump would opt to go that route again. Alternatively, the bloc could strike a deal to purchase more defense equipment from the U.S. to continue supporting Ukraine, as the U.S. appears likely to scale back, Kenningham added.